Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for the evening on one of the wildest trading days in stock indices in years. And it took place today, April 9th, 2025. As you can see, the market's up quite a bit right now. Gold has recovered a little bit off where it settled at 1230. Foreign currencies are just balking back and forth. A pretty dramatic rally that has taken place in energy prices that were crashing, and we'll see that in a few minutes. And bonds and notes getting a bit, I want to use that word carefully, a bit of a bid. I'll get into why this happened today after I show you first what you're getting in the morning. You're going to get jobless claims at 7:30. They're looking for a 4,000 increase. You're going to get the March Consumer Price Index, core and regular. That'll come out at 7:30. By the way, when I show all this, I have estimates of all this, and that goes out to my paid subscribers. For the free part, I just tell you what's coming up. Energy analyst forecast for the weekly CIA natural gas number at 9:30. Then we get a bunch of Fed people. We have Michelle Bowman's hearing to be vice chair of the Federal Reserve, and that's tomorrow. Then we have the Feds, Austin Goolsbee, Patrick Harker, Lori Logan, and Jeff Schmidt speaking. I hope that they say things. Generally, I pick up highlights of what they do, and I put that in my newsletter. And then the Treasury is going to update the receipts and outlays Thursday afternoon around 1 o'clock. So the event of the day was a meltdown last night. You heard what I said. The markets were melting down in Treasury yields. I have been writing to my clients for the past 2 days. I don't get why the back end, the 30-year bond, kept yields going up as the stock market's in trouble. And I said, the only thing I can allude it to, the culprit to me, China or Japan, since they're the two biggest owners of the treasuries, and maybe they're shedding it for any price. Just get me out of this dilemma. Normally, if you get a breakdown in the stock indices, normally you will see yields break, not go up, across the yield curve. And different parts of it do different things, but they rarely go higher in yield. And we were seeing the back end shooting up. In fact, you got to 5% in the 10-year. That just was a disaster. The president, it turns out, was watching that. He was apparently watching Jamie Dimon on an interview on TV talking about the disaster that could be looking us right in the face off the policy. And the president used the moment, looking at the stock market coming down. He's wiped out a lot of wealth for people, looking at interest rates soaring at the back end, and said, I blink. I've had enough of this for the moment. We have 75 countries that have come to us, according to the president, want to make a deal. Let's give them a pause. So what he did is for 75 countries, everybody that it called, everybody that the White House is working with, there's one exception, he went into a 90-day pause. That includes Canada, that includes Mexico, it includes all the other countries, even Spain, that is violently against what we're doing, the president is doing, and they have been if you will, getting much closer with President Xi in China and trying to get the EU to do that. Even they got the reprieve for 90 days. Where he went angry was on China, who last night reciprocated against Trump, again, raising their tariffs to 104%. So the president hit him again. He went to 125% on China, and he's prepared to go higher. If they want to stop, this is where it stops, but they don't get the reprieve. So the market looked at this with a sigh of relief. You broke back in a lot of the interest rates, 10 basis points, 20 basis points. What I think was going on is the basis traders, and that's where you come in the cash market and you buy and sell there versus a hedge in the futures market, thinking they're going to stay close together. And because of the leverage in that and because of what's going on, the trade, for whatever reason, stopped working. And when these trades stop working in big trade houses, there is hell to pay. and it started feeding on itself. And that's one of the things that I think was going on. The other is I do believe that there's been foreign selling. You never know. They don't tell you, the central banks. And when they go to sell them, there's no name on it. Oh, Japan did this. Oh, China did this. Oh, this one did that. They don't do that. So I think it was that combination. I still think that that gives us, America, 90 days to work this out, but the White House better not act like Congress acts. You have 90 days, make the people do the deal now. If you allow that 90 days to go by, you're going to get a worse deal. The pressure's got to be on him. So the president did a circuit breaker. Think of it that way. Has the problem gone away? No. What else did he do? He did not eliminate the 10% tariff on the bottom. Remember I told you I think that's there to stay? I haven't changed my opinion. I think it's there to stay until he can use it in a different way. Other political capital. Maybe it goes off before midterms. Maybe it never goes off. I don't know. But I don't think that it's going to come off right away. It could be an ultimate bonus for a country that's done something real well. I don't know. But he had to keep something on, and that's what he kept on. All right. So the stock market, if you look at these rallies, they go down in the history books of some of the biggest, and you'll see why as we get to the chart action. In the metals, while they're coming back up, I'd be very cautious. I'm not in love with what gold's doing, and yet I told my clients to buy it, and they did today, and they've got a pretty good lead right here, but that doesn't mean it'll stay that way, and I still like what I had them do. When you look at the weekly S&P, you're now up 7.96 for the week. You do know how big this was down earlier. When you look at today, just to give you an example, look at the market. You were up 9.38. In my morning update, the subscriber, I pointed out when we were down, I said, if you don't take out this low, and there's 3 of the indices that did not, 1 did, and I'll show that to you in a minute. If you don't take this out, which they hadn't, they weren't even down to those lows, I said, you're setting up the possibility that if you come back, you're going to get at least into the Bollinger Band. Market comes back. You can see what it's done. Now, I think you're going to have trouble right here at the 18-day average of closes. That's what I'd expect. I certainly don't think you're going right back to these highs. I just want you to be aware with that. The NASDAQ is right up to that resistance point. Again, it didn't do that. And by the way, why did I say all that? I'm going to walk you in as to why I said it. Come on, one back. All right. Day 1, which was Tuesday. Close under the Bollinger Band, close under the band, close under the band, close under the band. We had 4 closes in a row in most of the indices underneath the Bollinger Band. It's rare that you get 5. I keep pointing out and teaching you here those ideas. The Dow, the same thing. And then you came back today. Count and you'll see what I'm getting at. And I'm looking for resistance up at the 18-day average of closes in the market. I didn't say it's a sale there. I said a resistance point. You now have the swing line up, the bias down, and the logical fighting part is right there at that 18-day average. Which one of the markets made the lowest low that took that out? The Russell. What have I been preaching here is the weakest of the indices, the Russell. And I've been doing this a long time, telling you how weak and not having you buy this market. And I said, these analysts that keep telling people, they did it at the beginning of the year, the Russell's where you want to be. They have been consistently wrong. Let the chart action tell you, not what they think. And those that were saying it could not have been, in my opinion, looking at chart action. It just hasn't been there. So now that you come up, we'll see what the market does here. But again, this market's not in a new sell mode. So we'll get to the DAX here. The system's got to call up the data. There we go. Yesterday, I pointed out, let's go to that. If it'll let me. I don't know if it's going to. Might not be enough days of data here. That you have big support at the 200-day average and the 100 and the Bollinger Band. And look at how the market held that, and you're getting a bounce. The resistance here as well is the 18-day average of closes. I predict The 18-day average will be hit before prices get under this low. And the reason isn't that I'm good at it. It's that you lost the bearish momentum. And that normally carries back to that neutral zone. Doesn't mean I'll be right in my prediction, but that's what I think. When we take a look at the 10-year note, you got very oversold. You're getting a bounce, but there's nothing there that's screaming to me, buy this market. Interest rates are going back down. This is a big washout, and it may not be over. I'm warning you, it may not be over. We have two big auctions coming around. We had a 10-year sale today, by the way. Let me get back there. So the 10-year sale was exceptionally well taken, almost historic, how well taken it was by non-dealers, non-broker dealers. So that was, to me, very good. A lot of central bank buying in there, a lot of public buying that was also coming in. So they liked the yield when it was up, and it was sharply higher. They're very happy with that. I think they took it at 435. In the 2-year note, you've fallen back to the neutral zone. None of these are friendly. Are they bearish? Nah, they're all oversold, basically. I'm not in love with them. When you come to the dollar, you have lower highs, lower lows. To get neutral, you got to take out the high here, and then right above you is the 18-day average of closes. Now, if you close over that again, then maybe you can get up to the 200-day average, but that's an awful big risk if you're going to buy it over that number to get up that high and have a stop under that low. I'm not liking what I see. In the eurocurrency, I didn't think the market would stay over the upper Bollinger Band. You rarely do. You can get a day or two, but you rarely do. You got thrown back right away. What I don't like on the chart setup here, and normally I want to make trades. I don't like that to buy the market, for example, at the 18-day average, you got to take out that last break low. Not my cup of tea. A lot of word that the Bank of England wants to go with a big rate cut. Now that there's that 90-day pause in tariffs, they've got some room to maneuver. So I wouldn't get overly friendly in this market. It's obviously fighting a battle right at the gray line, which is the 200-day average, and the Bollinger Band to try to stay up. In Bitcoin, looks to me like you're making your low against the lower Bollinger Band, and the market might be through selling on the downside. If the stock market's going up, if my analysis is right, it'll go up with that to a degree. Now, look at this range. Just want to show you what went on in Brent. So if you think the market was an easy trade, 58.39 to 66.02. And you made the highs late in the day. You do understand that. So you had a rally just shy of 8 cents. That is so insane that I wouldn't know how you handle the risk with it. But again, 1, 2, 3 days under the Bollinger Band. What do I teach you? Don't be short under a Bollinger Band. I really believe that. And don't be long over the band. And I know traders keep selling. It's going to 50. Well, they just got their head handed to them. WTI, you had 1, 2, 3 days under the Bollinger Band. Came back. I was pointing this out this morning to traders. Gasoline, you popped back into the Bollinger Band also. So I'm looking, are these markets going to give us something we can do with them? Or is this just a relief rally and nothing more than that? Got to be careful. That's all it might be at the end of the day. But is this a chart pattern to trade? A higher high, a vertical monster break, and you get a little bit of a bounce? I don't think so. Same in the nat gas, but at least here I can hang my hand on things. Number one, 100-day average. First test of it, and you heard me say it for 2 days prior to today. I said, I think you're approaching where the pros have come out of shorts. I said it on for Monday and Tuesday. Today you went even lower, and I just sit there and I look, I go, it doesn't matter to me. The high percentage is it's going to get back in the Bollinger Band, and it most certainly did. Resistance back up at 394. I think you'll see aggressive selling by professionals up there with stops over that high, especially now that the market's gotten away from being in an oversold condition. So you put it together, you get game plans. And that's what we're all about. Trying to come up with game plans, but how do you execute them? Well, one of the ways you can execute this is by joining me in my updates, all right? I put out market letters for my subscribers. They pay me for this, all right? 2 a day, Monday through Thursday, 1 Friday morning, 1 Sunday night, and special updates through the day, like a number of you received from me when I told you what was going on with President Trump. And I got a lot of people that wrote me back and said, Ira, I was nowhere near a computer. I didn't know any of this was going on. Thank you for sending. I sent that out to a number of you that aren't my paid subscriber to just show you what you're not getting. If you didn't get it from your other research analyst, brokerage firm, we send that out. So I hope that helped all. How do you get that info? Go to iraepstein.com, free offers. I'll have a link up at the top here for you anyways. You have yourself a great evening.